The biggest tax cut bill in history is one step closer to becoming law. And it's not just tax cuts. This bill also comes with $2.5 trillion in government spending cuts. What does this mean for you? Will this bill make you richer, or will it crush the economy? Could this lead to a massive recession, or is it a financial opportunity? In today's video, I'll break it all down. How Trump's tax cuts will impact your income and investments. What the $2.5 trillion in spending cuts will do to the economy. And most importantly, how you should prepare for what's coming. This is one of the biggest financial changes of our lifetime, so make sure you watch until the end. Hey everyone, welcome back to the channel. There's a lot happening right now in the world of taxes, government spending, and the economy. Some people say this tax cut is a game changer. Others warn that it could push the US into an economic crisis. So today, we're going to break it all down, starting with what's actually in this tax cut bill and why Wall Street is paying attention. Trump's tax cut bill just passed the House of Representatives, and it's now one step closer to becoming law. But this isn't just any tax cut, this would be the biggest tax cut in American history. Extending the Tax Cuts and Jobs Act, TCJA, from 2017. The 2017 tax cuts were set to expire in 2025. If that happens, tax rates for all income earners will increase in 2026. This bill extends those tax cuts permanently. Eliminating taxes on overtime income and tips. If you work overtime or rely on tips, your extra earnings would no longer be taxed. Eliminating taxes on Social Security income. Retirees who receive Social Security benefits would pay zero federal tax on those payments. Sounds great, right? But where does the government get the money for this? Here's where things get interesting. To pay for these tax cuts, the government is planning $2.5 trillion in spending cuts. Medicare and Medicaid cuts? The House Energy and Commerce Committee has been tasked with finding $880 billion in savings. Many experts believe this could mean cuts to Medicare and Medicaid benefits. Federal job cuts? The government could fire federal employees and shrink departments to save money. Some argue this could increase unemployment in the short term. Less funding for public assistance programs? This could include reductions in food stamps, unemployment benefits, and welfare programs. Why does this matter? Every dollar the government doesn't spend is a dollar that doesn't enter the economy. And if the government cuts spending too aggressively, it could trigger a slowdown in economic growth, or even a recession. The government is the biggest spender in the U.S. economy. In 2024, the U.S. government collected $4.9 trillion in taxes. But it spent nearly $7 trillion by borrowing the difference. This means, if spending is cut, less money flows into the economy. If spending continues, inflation could rise even more. So what happens now? There are two major risks here. Keycap 1. If the government cuts spending too much, right-pointing arrow, the economy slows down. Keycap 2. If the government keeps borrowing money, right-pointing arrow, inflation rises. And guess what? Both scenarios could hurt the stock market in different ways. How does this impact you? Keycap 1. If you're a high-income earner, you'll likely benefit the most from tax cuts. You may pay less in federal income tax. Keycap 2. If you rely on government programs, there's a chance your benefits could be reduced. This includes Medicare, Medicaid, Social Security, and unemployment benefits. Keycap 3. If you're an investor, lower taxes could boost corporate profits, right-pointing arrow, stock prices rise. But if spending cuts hurt the economy, right-pointing arrow, stocks could fall. What should you do to protect your money? 1. Stay diversified. Don't bet everything on one industry. Consider adding dividend stocks, real estate, and bonds to balance your portfolio. 2. Have a cash reserve. If the economy slows down, having cash on hand will be crucial. 3. Watch inflation and interest rates. If inflation rises, the Fed may raise interest rates again. That could hurt stocks and real estate prices. 4. Consider alternative investments. Commodities like gold and silver tend to perform well when inflation is high. Crypto could also be a hedge, but be mindful of its volatility. Trump's tax cuts could completely reshape the U.S. economy. But with $2.5 trillion in spending cuts, there are serious risks to economic growth. What do you think? Will these tax cuts boost the economy, or will spending cuts push us into recession? Are you changing your investment strategy? Let me know your thoughts in the comments below. If you found this video helpful, make sure to like and subscribe for more investing insights.